Hello there, or Zdravstvuyte, as we would say in Russia. That's for my Russian friends on trading floor this week. Right, okay, so what have we got going into today? Last week's trade to sell the euro US dollar because it had broken the neckline of Head and Shoulders. That trade's still good. I could actually just say do that again if you like, but let's try and be a bit more, give you a bit more. So I'm looking at this US dollar strength trade still, and actually, if you look at that against the Canadian dollar, so dollar CAD last week broke above 127.80, 128.00. That was a big area, and then got up to 129.17 this week before pulling back. And now that pullback has got back to, and he's holding that 128.00 level. And barring anything on payrolls today, I expect that to continue. That's what the chart's saying. So we should be buying the dip. Okay, so if we get long above 128.00 and work a stop below 127.50 to 70, that's the sort of risk we want to put on a trade. Where can we target, and is the risk reward right for this sort of to make it a worthwhile trade? Well, I think the answer is yes, because as the initial target, the first target would obviously be a return to the week's high at 129.17, but it's a good looking chart this, and we've got an extended target above that at 131.30, which is a Fibonacci level. And so if both of those targets were hit, we'd get a profit of somewhere around 130 ticks against 40 or 50 ticks of risk. So yeah, that works on a risk reward basis. Obviously, the major risk out there being today's numbers. So you could decide whether you want to try and get this trade on before or after the numbers. I will leave that to you. Have a good day.